Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which has just broken above a quite important level of historical structure, has also already retested it and is rejecting it to the upside. In fact, this level was acting as previous monthly resistance. Starting from here, the market created all this rejection to the downside. Then again here, the market respected this level as historical resistance. Again here, respected it as resistance, and then we had the break above the zone with this impulse. And as we know in the market, previous resistance, once it is broken to the upside, it becomes support. So what we had here was a retest of previous monthly resistance turn support, and the market rejected it to the upside, also quite aggressively, which is exactly what you expect in a situation like this, in which you just had the break above a historical resistance level, at that point turn support. We can also notice that from a pattern standpoint, we have a very clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, what we can see is that we have a market which at the moment has rejected to the upside the area exactly in between the 0.32 and 50% Fibonacci retracements, which was also lining up with the previous historical resistance turn support, therefore creating a confluence of support and demand inside of this area. And inside of a confluence of support and demand, you do expect to see institutional longing, which further increases the probabilities of a potential rejection to the upside, which in fact fueled this push higher. And we will be speaking about institutional longing later on when we move to the commitment of traders. So essentially what hedge funds and the big players in the market are doing. Now that we have covered what we have from a monthly perspective, let's drop down on the weekly time frame and see what we have. Well, on the weekly, the situation is quite clear. We have a market which has been creating higher highs and higher lows. Starting from here, we had the impulse to the upside, creating a new higher high. So the high here above the previous high. Then we had the correction. The market created a new higher low, so above the previous low, which was here. And now the market has created a new higher high. So what we know is that in an uptrend, you expect the market to create a series of higher highs and higher lows. So at this point, since the last move was the creation of a higher high, at this point, you would expect a correction so that the market can print a higher low and then potentially continue higher. So the weekly time frame seems quite bullish as well, but there is the possibility to see some short-term bearish price action before getting that continuation to the upside. Now, let's drop down on the daily time frame and see what we have. Now, from a daily perspective, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this push higher, testing this level. Then again, when the market broke above the level and was retesting it here, I made another breakdown explaining all the reasons for which we could expect this rejection to the upside. Then again, after this impulse to the upside and when the market was correcting from here, I explained all the reasons for which we could expect the creation of this new daily higher high, and again the market gave us the move. And when we had the correction and the market was testing this previous resistance turn support, I explained all the reasons for which from here we could expect this potential rejection to the upside, which is in fact exactly what the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. However, at the moment, what do we have and what kind of structure the market has created? Now, before we dig into the details of what we have from a technical perspective here on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing and how they're moving their orders. Now, I have already selected here the data precisely for gold. And what we can see is that with the last reports in the long run, net positions have been massively increased. We went, in fact, from having 131.1k net positions all the way up to having 207.2k net positions. So a massive increase of the net positions, and even only with the last report, we can see how institutions went from having 199k net positions up to 207.2k net positions, showing how institutions have been massively increasing their longs and decreasing their shorts with the last reports. In fact, institutions went from having 211k longs all the way up to 281k longs compared to only 74k shorts that they're currently holding. So clearly institutions are moving and are positioned to the bullish side for gold. Now let's keep that in mind and move back to the analysis. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. From a daily perspective, what we have at the moment is a situation in which the market is about to test this previous red candle. Now, why is this red candle relevant? Because during all this move to the upside, only in one specific point, the market has found clear resistance, making and creating here this red candle, showing how a big amount of players started shorting gold exactly at this level, creating this resistance level. Now the market has broken above the zone. So as usual, this previous resistance is now turned support. So in a situation like this, in which we have an impulse and then the correction, once again, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. And what we can notice is that this support area is also in between the 0.618 and 0.786 Fibonacci retracements. So we do have confluence of support inside of this area. This means that if we will see a correction to this zone, there is good probability of seeing more institutional longing inside of this area, which at that point would further increase the probabilities of a potential rejection to the upside away from the zone. So if the market will correct to this area, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I definitely wouldn't be surprised if we get a potential push higher away from the zone, completing that daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.